Welcome back to the weekly portfolio update video. Today I wanted to highlight a bit about the labor market and how tech and finance giants are losing their employees. The portfolio sits at $10,844 and is up from last week as the market rebounds from the recent correction. I haven't changed anything to the portfolio, just small deposits and picked up some more JP Morgan and VOO. But what I wanted to highlight in this video are two articles from CNBC and an overall trend that is happening in the labor market. The first article, by Katie Rooney, says, as Wall Street banks embrace crypto, high-flying startups look to lure top finance talent. Other top crypto executives who left Wall Street recently expressed some frustration at how long it takes to get projects moving within a large financial institution. Mary Catherine Ladder, Chief Operating Officer at Uniswap Labs, left her job as a managing director at BlackRock last year. Her foray into crypto has started as a side project within the assessment management company. At Uniswap, Ladder is now working on emerging decentralizing cryptocurrency exchange. She said she couldn't pass up on this opportunity to work on the next wave of innovation. Justin Schmidt, former head of digital asset markets at Goldman Sachs, made a similar career change last year. Institutional crypto trading platform Talos, and described it as a risk in a similar way, calling the decision multi-dimensional. Inherently, you're taking a brand risk. Goldman is one of the storied institutions of Wall Street, Schmidt said. You're also taking a risk by staying in some place more traditional. And I very firmly believe that this is a generational change and there's a generational opportunity here. Cryptocurrency startups and banks describe a shift in the hunt for top talent, many looking beyond candidates with MBAs and instead considering those with less conventional resumes. Ladder and Schmidt said some of the best crypto hires have been self-taught engineers or crypto influencers they first interacted with on Twitter. I'm constantly meeting people who are 23 years old, who are smart about markets, as people who have worked in Wall Street for years, Ladder said. People who frankly had no interest in financial services, who would never really explore or consider working on Wall Street, are excited to work at Uniswap Labs and companies like us. I think this shows how much the world of finance is changing post-pandemic, with workers now moving out of traditional framework and mindset, with employees putting more emphasis on flexibility, working from home, and the possibility of moving away from the traditional large market dominating companies to smaller companies and startups where they can get more equity and possibly a new role and impact. This again can be seen happening at Meta. The tech giant has been struggling to keep some of its top engineers for a while now, whether that's the stock fall or other factors. This article goes through the issue Meta is facing and how come they might be in this position. Facebook parent Meta has lost some of its top artificial intelligence scientists this year as the company continues to pivot towards the metaverse. At least 4 prominent members of Meta AI have departed in recent months, according to people familiar with the Meta and LinkedIn analysis. Between them, the scientists have published dozens of academic papers in the world-renowned journals and made multiple breakthroughs that Meta has used to enhance Facebook and Instagram. Carl Herman, an AI entrepreneur who used to work at rival lab DeepMind, told the CNBC on Monday the true figure could be more than half a dozen, adding that the company's London AI lab has seen an alarming number of exits. Meta's London office just collapsed and they lost most of their top researchers in the span of 6 weeks, he said. Neil Lawrence, professor of machine learning at the University of Cambridge, told CNBC that he wasn't surprised. Mark's gone all on Meta now, and they never invested properly in anything in London in the first place, he said. Those who have left the company include Edward Grafenstein, a research scientist that led Meta's efforts on a branch of AI known as reinforcement learning, who departed in February. Heinrich Cutler, one of Meta's AI research engineer managers, left in recent weeks to join Infection AI, a startup by DeepMind co-founder Mustafa Suleyman and LinkedIn billionaire Reid Hoffman. Cutler joined Meta in January 2019 after spending 2 years at DeepMind. A number of other Meta AI staff have left or are expected to leave in the coming weeks. A person familiar with this matter told CNBC, asking to remain anonymous due to the sensitive nature of the issue. They added that there's no one reason people were leaving. Some people jump to other big lab because they see it as a chance to advance their career or research agenda better, the source said. Others go because comp or hiring potential for their team is better elsewhere, the source added. Others just want to do a startup or get involved with a smaller company. For some of it, it might be tied to Meta stock tanking, but I wouldn't say that's necessarily the main reason. Meta's chief AI scientist, Jan LeCun, who founded the firm's AI lab in 2013 after a dinner at Zuckerberg's house, told CNBC via email that people have changing interests and move on. There has been no detectable migration from FAIR, Facebook's AI research, London, nor any other sites. It's worth noting that several people from DeepMind and AI labs have also joined Meta in the last couple years. Fueled by belief that AI is going to change the world, US tech giants have been investing heavily into the area over the last few years, with most of the money going towards hiring top talent from leading colleges like Oxford and Cambridge in the UK and MIT, Stanford and NYU in the US. I personally believe big companies will face the issue of losing employees, just like every business does. People will look for situations and opportunities they believe will best suit them and their future aspirations and career path. Companies just like Apple and big law firms have tried to combat this by simply offering more and offering bonuses to entice and keep talent. Overall, the labor market has had a great rebound since the pandemic and has recovered much faster than previous disasters, such as from the 2008 financial crisis, which took much longer to get people back in jobs. I found this interesting and thought it would be a good topic to cover and something people would find educational. Moving jobs is something that will always happen, and post-pandemic work life has changed things forever. That is one of the main reasons I believe investing in strong companies that can handle these constant changes and are adaptable to different situations is something you must do. If you enjoyed, leave a like and comment your thoughts and tune in every week for more business and finance related content.